Okay, all right, Mangalam. Thanks very much for that. We have Sacchitanand Uttekar joining in from Tradebulls to discuss the technicals of the market now. Sacchitanand, hi, welcome to the show. Well, it's turning out to be a session where we are seeing some amount of profit booking. We're probably going to see, the volatility pick up in the second half. How are you placed today?
Good afternoon, Neeta. Good afternoon, Mangalam. I think clearly what we have been observing is that 26,000, 26,050 has been a kind of a resistance for the market for the last four trading session. But if you look at the overall setup, after 14 days of higher top, higher bottom sequence, it is 4 days of consolidation, which sounds very healthy for the next wave of the market. So I think from a trading perspective, we may see this particular consolidation getting carried forward. At least for the day, we don't expect the Nifty to close above that 25,920 mark. We are expecting that the expiry could be a bit lower than that. And on the lower side, in the last 3 weeks, the Nifty has defended its 5-day exponential moving average support very well. Now, this particular support is currently placed at 25,840 zone where it is currently trading. So I think it will be very significant if we see any slippages below the same, then there is a good chance that the expiry may also be closer to that 25,750, 740 kind of a zone. So I think it's a very tricky situation. It depends on the next half an hour. In case if we see a stable movement above that 25,840, 860 zone, then there's a good chance that we may see the expiry closer to that 25,900 level. But beyond that, the probability looks bleak. When we look at Nifty Bank, I think it has been one of the strongest. The consolidation is very healthy. We have a sequence of inside bar formations on the daily scale. Eventually, we see this particular index outperforming, and we expect that the November series could be very significant for this particular index. We are expecting a move towards 59,080 eventually. So here, I think any declines would be a good opportunity. Currently, the supports are placed at around 57,800 thereabout. So I think in case if we see further slippages, then that will be an ideal level to reposition or create some fresh long positions for an eventual target of around 59,000.
Sacchitanand, what are your top bets then?
Good afternoon, Vinny. We are looking at metals from the metal pack. JSW Steel is something that we are liking, what we have recommended to our clients. If you look at the 60 minutes chart, there is a broadening formation with a base at around 1150, which has been reconfirmed. Now, the overall expectation is that there could be an immediate swing towards the higher bound, which is placed at around 1220. So we are recommending building fresh long positions in JSW Steel futures in the November series. The stop loss can be placed at around 1162 on closing basis for an immediate target of around 1220. The other stock that we have recommended to our clients is Naukri.com. Now, if you look at the overall sequence, the stock was in a low top, low bottom sequence. But if you look at last 15 trading sessions, it has managed to retain its swing support at around 1340, 1360 kind of a zone, which looks like a triple bottom formation in making. Now, this particular move will be confirmed once we see the stock, confidently trading above that 1380, 1400 mark. We are expecting that there could be a breakout soon in this particular counter. If you look at the ADX, it has started to trend up. We have already seen the stock confidently trending above its 520 and 50-day exponential averages. So I think the overall setup looks good. We are expecting a quick move towards 1440. The positional target is placed at 1470. The stop loss for the trade can be placed at around 1355 on closing basis. And then the stock can be added in your trading portfolio in the for the November series.
Okay. All right, Sacchitanand, we're going to leave it on that note. Thanks very much for joining in and taking us through all of those strategies at this point. Just want to point out that NetWeb is